one. We are on your ABA/investing workshop. Like I said, some people are trickling in, so I will be pausing from time to time. But let's get started. We got a lot to cover, and I want to provide as much value in about 45 minutes as possible. And then we'll do a Q&A. So if you have questions at any time, all you can do is just type them in below. So that way I know we got some questions. Uh, one sec, admitting people. Here we go. Now someone is unmuted, so make sure that you're muted. I will do my best to also mute you guys as you go on. Yeah, there's one cop. There we go. I got you muted. Don't worry. I'll protect your privacy. Here we go. Trauma informed. So what does it mean to be trauma informed? Well, we're ABA practitioners, a lot of us are at least, and we're coming in assuming that, hey, no matter how old you are, you probably experienced some sort of trauma. And when it comes to money, well, I don't know anyone who did not experience any type of trauma. So one time I was taking the bus with my mom, and there was a woman there, and my mom and her were reminiscing on the old days. And in the 90s, in the Soviet Union, there was a day, this also happened in Mexico, by the way, where the value of the currency got devalued in a single day so hard that the woman who saved up all this money, she could buy a house with it. Literally on that day, she could buy all the apples in a store. That's it, just all the apples. Luckily, most of us live in the United States and not a nation with that much issues. Not that we don't have our issues here, but that can happen. And so we all come from some sort of trauma. My mom is a huge saver, but going through what we went through in the Soviet Union, she's like, we got to put our money in something. It can't just be sitting in cash. They could change the value of cash. And this year is a huge lesson where a lot of us are realizing, whoa, life could get expensive really, really fast. Gas prices, all that, food prices. It's not that that stuff's going up. It's that the dollar is also going down. And that's a normal thing. The dollar goes down gradually every year because there's more of it printed. So of course, as it becomes more available and less scarce, its value can only decrease over time. Now, who the heck am I? I'm Georgie. I was RBT in 2015, 2016. I became a board certified behavior analyst in 2019. I work in a clinic right now. I love it. I go to schools, I go to homes. Sometimes I zoom in. So I've seen it. I've done it all. I had clients ranging from age 1 all the way to age 21. So I've worked with a large variety of demographics in different areas, et cetera, et cetera. I did the whole driving 80 miles around LA. So while I was driving, I was listening to a lot of podcasts, and I'll show you some free resources at the end, what I listen to know what I know to grow a 6-figure portfolio relatively quickly with the same money that a lot of folks in this chat make, because a lot of us come from the world of ABA and we have the same jobs. With that being said, everyone has their own and different privileges, and I certainly use mine. Everyone has different ones. It's important to sit down and assess what do you have that's working for you just because you exist. Other than that, when I started as an RBT, I also worked 7 days a week with 2 other jobs. I was doing kids parties on the weekends. So maybe you've seen me at your house. I was Spider-Man. I was Mickey Mouse. I was Minnie Mouse. I was all of them, all the characters. The hardest one, Teenage Mutant Ninja Turtle. You cannot see in that. And then I was also working at a restaurant, just getting cash, and it was tough. And I'm so happy that ABA chose me. That was very lucky. As soon as I was in it, my supervisor said, hey, you know what? You're pretty good at this. You should keep going. And so I listened to her and I kept going. And 2019 is when I got my master's. And of course, my pay increased. And with my pay increasing, I started investing even more. But since I got my first dollar, I was investing in stocks. Thanks to all the time that I spent learning, driving from client to client, driving to school, all that time compounded up. And I'm so lucky that I actually, before I had money, I learned how to use it. So Don't waste that time. Obviously, there's a lot of trauma that we just talked about, and there's a lot of anxiety and fear, maybe even depression when it comes to thinking about money, thinking about investing. My mom was telling me in 2008, she was just seeing people panicking on the news about the stock market. She's like, who even cares about this stuff? Like, who does this actually impact? But it does. There's a lot of people who invest outside of their retirement accounts for maybe earlier money goals, getting a home within a decade or so, or 5 years. Saving up for a car, but investing up for a car, a travel fund. It impacts a lot. Early retirement goals, or work optional life goals. So most people don't use investing accounts for those type of goals, but you can, and that's what this workshop is about. I want as many people in my field, especially, to be able to live a work optional life, or at least fund some of their goals, and hopefully maybe even teach some of our clients. I had a client who was really interested in learning about stocks. That kid, he was really like shutting down all throughout sessions. And one time I just brought up stocks, and he was like, "What? Let's talk about it." So this is really cool. Anyways, yeah, the market is actually down a lot right now. Cryptocurrency especially decimated, basically like Great Depression decimated. So a lot of fear, but the true answer is you're always going to experience a stock market crash. The longer you live, the more of them you will experience, and it's just part of the game. There will be gifts. I'll teach you guys how to claim free gifts throughout this workshop. Fidelity, actually, which is an investing platform, announced a $150 gift starting, I think, the 22nd of November. So you guys could still claim $150. With Webull, it'll be $190. We'll talk about that at the end, maybe in the Q&A, but there's a lot of money out there to claim. Chapter 1, MO money. You guys like what I did there? Okay, thank you. I'll be here for the next 40 minutes. Casey and Sandra are new BCBAs. Along with more power to help those in needs, they also unlock a lot of power to help themselves. One sec, letting someone in. So they are now making more money than they made as RBTs. Now, this is just an example. Maybe you're getting paid more, maybe you're getting paid less, maybe this is exactly you, maybe you are Casey and Sandra. So after benefits, they receive about 4.1K a month, and there's their essential expenses. They kind of have it written out there, and they have to spend about 3.2K. And I did include savings in there for now, as well as charity and other bills. So they're somewhat frugal, not too much responsibility, not kids or anything like that, but this is just an example, right? Let's figure this out. So Casey, she has a surplus of $900 a month left. Her private events, I'm only left with $900 after all that. I'm gonna enjoy it. Hashtag access. So she goes to her favorite store and meets her favorite people. There's actually another girl named Casey working at Target right over there. She's really excited about that. And she visits these guys about every 3 days. Then after that, she goes to Sephora. She goes to Chanel. She gets to DoorDash. She gets her, she kind of shops around for that Tesla. After that, she goes to her favorite place on earth after Target, Disneyland. So she pretty much spends all that $900. Sandra, on the other hand, has a $900 a month surplus as well. And she's going to think about, what do I care about doing? And what do we call this? We call this a preference assessment. So Sandra's conducting a preference assessment on herself. She's not looking at what her friends like to do, what we're shown in the media of what we like to do. She's actually sitting with herself and thinking, what the heck do I value in life? What do I want to spend my money on? And so Sandra, she goes ahead and she realizes that she likes going to Target too. There's someone named Sandra there as well, working in the back, working there every single week. So she's very excited about a person sharing the same name, working at her favorite store. After that, she goes and spends and splurges on Chanel bag, on the Tesla, on the food, on the DoorDash. Then she goes to her second favorite place on earth, Disneyland, after Target. Really happy to do that. Deep breath, deep breath, deep breaths. Of course, when new money comes in, we get excited and we start spending. At least most people. But both Casey and Sandra sit down on month 2 of their new money. I also might cough from time to time because your boy just had COVID. There's the first one. Um, Casey continues with the behaviors of month one. Now, remember, there was a savings goal that she was doing, 500 a month. 35 years later, she has about almost $250,000 there, or a fifth of $1 million. Not bad. But Sandra does something different. She's actually lazier than Casey because she wants to do less to get more. That's what laziness is all about. And there's a famous kind of cringy but true Bill Gates quote where he says, "I will always hire a lazy person because they will figure out how to get the job done in the fastest way possible." And so, taking the path of least resistance, Sandra starts investing about 700 a month of that surplus money that she has. So she still leaves a little bit of it for herself to go visit her BFF at Target. And then she ups it to 1,000 a month. 35 years later, she has almost $1.45 million. If we're conservative, this is assuming about a 7% rate of return, but history is actually a lot closer to a 10% rate of return. Um, you could do the math on a compound interest calculator. I don't think we'll have time to actually go through that, maybe in the Q&A. But this is a conservative estimate. Now, again, this does not assume a lot of variables. Like, we don't know if she's going to get married and have kids or divorced or all of that. But we also didn't account raises in her life, side hustles in her life. We didn't account maybe her inheriting money at a certain point. We didn't account for just how much BCBAs get paid over time increasing. So there's a lot that we didn't consider here. This is if she never gets a raise again and her responsibilities don't change. So I feel like that kind of balances out. Order of operations. So this is just an example of how you can break down your money goal wise. So a cool goal to have is covering that first 2 months of safety. So having 2 months of expenses in your savings is awesome. But after that point, it is time to start putting as much as you can aside into investing while gradually building that emergency fund over time. Some people prioritize building a 6 month emergency fund before they touch investing. The only type of investing that is always a no brainer is a 401k policy with your employer if there is a match. Now, I like the match to be at least 20%. That means for every dollar I put in, I will be getting back 20 cents. So that is about that's 20% right there. So after that, I would go ahead and pay off all credit card debt because usually credit card debt goes as high as 16, 18%. And that's why the 401k trumps credit card debt because you're automatically getting more than you would be saving by paying off credit card debt. And then building that 3 to 6 month emergency fund while investing. While investing can be operationally defined in so many different ways. It could be a taxable brokerage account. It could be going back in the 401k beyond the match. It could be a Roth IRA. It could be a business account if you own your own business. There's a lot of different accounts like solo 401ks, Seth IRAs, and that's where you guys need to start doing your own research. So hopefully that kind of pushes you in the direction of what I need to look up, what I need to learn. Finally, this is not me flexing, but this is me showing you that this kind of guy who looks at like he was just a fetus last week. Hopefully, I don't know. I actually might not look that great because I stayed up watching Netflix till 3 a.m. I know this is a workshop about good decisions, but I just want you to show I made bad decisions too. But it was a lot of fun, and sometimes it's the right decision to make a bad decision. But anyways, this is what I built up in the last 7 years or so of investing. And I went pretty hard here. So I was investing as much as I could, mostly into this Vanguard 500 index fund. You don't need to have a Vanguard account to be doing that, but this is what I've been gradually doing, ignoring all of the noise, all of the sound, Joe Biden, Donald Trump, or potentially Hillary Clinton, right? COVID, I ignored all of that. I watched huge swings in this portfolio. This month or this year, there's actually about a $70,000 swing downward. So I'm actually in the same place I was a year ago in my portfolio, and that happens. That's normal. About hold on one sec. Sorry, gotta let someone in here. There we go. About 30% of the time, stocks are going to go down. But that's what the media focuses on, right? They focus on that 30%. It scares you. It lets them manipulate you guys because they need a scared population, people who are afraid of this stuff. And then you have people who are kind of dumb like me. I don't care what the news says. I'm just going to invest automatically every single month, no matter what. So that's how I build this. For anyone curious, these are not a secret or anything. We could always talk about it, but I don't want to promote stuff by accident that could lead me. This is not financial advice or anything like that. This is just me leading by example, modeling. So these are some of the things I hope to get through. So I won't read them off because I actually want to get through them. Chapter 2, tokens and time travel. So what the heck is the stock market? Obviously, we've heard of this tool. People lose all their money in this thing, right? Not quite, not quite. People who have a system in place, right? Rule governed behavior in place, they hardly ever lose in a 20-year period. Now, in a year period, the odds of you having more money is 53%. So that's in your favor. And you can fact check all these numbers on your own time. No sources here. This is just a fun little workshop. So in a 20-year period, odds of having less money is less than 0.01%. So it only happened one time. And because there's this thing called dividends, which is profit being paid to you for simply holding a stock, you actually made it out on top of the Great Depression in that 20-year period, especially if you ignored the noise and kept on buying through the Great Depression. Now, of course, it's very hard to buy through a depression. That's why I said depression, but that's where people get the most rewarded. Right now, we're in a, the kind of Biden administration right now is not operationally defining this money situation as a recession. And, there's merit to that, but there's also merit to thinking of it as a recession, even though jobs are kind of popping and booming for the most part. We are seeing the first waves of people getting fired in the tech industry, of Meta, right? Facebook, Twitter, et cetera, et cetera. The crypto space, but ultimately it's up to you what definition you use. But all I care about is the stock market was down about 23%. That's a whole lot actually. That's almost a fourth of your money is cut, which is a great time to keep on buying, but it's always a great time to keep buying if you're in it for the long haul. You can think of stock as a fruit. You think this Apple business, right? Not Apple, the tech company. It's just an Apple business that sells apples. They're really profitable. They're actually worth almost $3 trillion, and you don't have the money to buy a $3 trillion company, but you do have $250. So you buy some slices of the company or stocks, and they change proportionally in size with the company. So if this $3 trillion company goes up to $6 trillion, well, now your $250 goes up to $500. That's pretty cool. And sometimes this company will pay you seeds or dividends as a little bonus incentive for you holding on to their stock. That's actually responsible for 70 to 75% of the stock market's growth in the last 40 years, those little seeds, those dividends. How can we define the stock market? I try to be creative with this, a collection of people's buying and selling behavior measured in stock price, a marketplace where people click buttons to purchase or sell pieces of companies, a time machine, a token economy. So why a token economy? Imagine it's 1990 and you saved up 20,000 tokens or dollars. In 2022, you can only buy $9,000 worth of goods. Now, price-wise, it'll still say 20,000, but the value of the dollar decreased. right? Remember that. Every year, the dollar decreases in value. So you can only buy about 9,000 worth of reinforcers. And I'm just curious, ABA heads, can you please type into the chat if you use token economies, if you're fans of it? I know there's some people like the Greg Hanley BCBAs who are less keen to use token economies. I think it's a lot to fade out in an extra step. And there's people who love token economies and get very creative with it. So if you use token economies with your clients, I do want to hear about that. So type that in if you use them or if you don't use them. Um, Okay, here's another example. In 1990, you took that 20K and you actually invested it. Well, now you have $105,000 if you invested in the top 500 companies. You can think of this as a $85,000 gift or tokens, or you can operationally redefine it. And you can realize that money is not just money. It can be just seen as money. It can be seen as a percentage. It can also be seen as time. So the measurement tool that we use, it impacts our framework. When the market goes up, I don't see dollars. I see PTO. I see days. I see time. I see vacations. Some people, they see points. That's how the media talks about it. They're like, and the market is up 400 points. I think that's kind of gross, right? This is not a game. It can feel like a game, but don't get confused. This is definitely real life. Not that money is the most important thing in the world, but it helps us access a lot of important things in the world. Um, Here's an example of how you can view that what I just described, that framework in an actual example. So the Apple company, right? In the last 5 years, this is a little bit dated, maybe about 6 month dated, February 4th dated, is up 420% in the last 5 years. So you have a cool profit of about $4,200, or you have 420%, or if you make about $55 an hour, hypothetically, you basically got 3.85 hours of PTO for every $55 you've invested 5 years ago. That's pretty cool, right? Again, this is a very simple example. Rates change, people make more money, less money, but the less money that you make, the more time you kind of get back. If you followed that example at all, I put this nerdy thing in there. It is mostly for me, seeing if I could make this work, and I was really excited by that slide. So let's slide on over to chapter 3, seek reinforcement from the stock market, and you will get wrecked. Day traders attempt to reinforce themselves with every trade. Have you guys heard of people who have 14 computer monitors and they're just trading all day with stocks? Yeah, that's not what I do. That's actually a fool's game. Now, a minority of day traders actually succeed. They get a lot of money, and it's really cool and it feels really good because you're getting the instant gratification. But the data says about 97% of day traders within 5 years' time will be in the red, meaning they will have less money than they started with. And if they do have more money than they started with, they'll probably still be losing to someone who simply held their stocks. Now, the person who held their stocks and is winning or making more money than the day trader doesn't feel as good as the day trader. Why? Because the day trader is getting reinforced. The other person, they're not really being reinforced. They didn't do anything. They just walked away. Now, maybe they'll be reinforced when they log on to their account and they'll be excited and log in more frequently. But the day trader will just increase their trading of behavior, which actually leads to a higher probability of loss, because the more you do, the less you get. Remember our early example. This is about being lazy, getting the most for the least. We write reports and all that. We don't want to stay and trade all day. Plus, we got sessions during that time. So if not reinforcement is at work here, right? The people who are getting rewarded the most, it's not about reinforcement. What the heck is it about? I want every BCBA in here to brainstorm this, because it's important to use the ABA framework, but sometimes behavior increases over time, and you can't really say that it is reinforcement. 100% of the time. There's a lot of different behavioral frameworks, right? And if you're more interested in learning about alternative behavior frameworks, there's a cool not TED Talk. Well, there is a TED Talk, but there's a cool Stanford um, class that you can take for free on YouTube, and there is an ABA section of it, and it's Robert Sapolsky's behaviorism and behavioral analysis of the world, from molecular stuff to behaviorism, Skinner and all of that, conditioning, Watson, to game theory. So if reinforcement is not at work, we're still going to use the framework of ABA to talk about this. We're going to think in terms of rule governed behavior. So we create our own reinforcers. We contrive reinforcers, because naturally investing is not reinforcing. If it was, everyone wouldn't be in this workshop because they would already be investing, or investing harder, or investing with more competence and all that. So here's her sentence. If I invest $700 a month into stocks, I'll get my portfolio to fund my future vacations and pay for all my groceries. The reward is only available with a necessary amount of time needed to invest, right? You want the odds to be in your favor. If you're investing for 2 years, the odds are slightly in your favor, right? You're kind of in that 55% range that you will walk away with more money. But if you really want to make sure you walk away with more money, you need at least 2 decades where you have that 99.9% chance you walk away with more money. Now, most of the time you walk away with more money, but without the knowledge of compound interest and how it works, you might look at your stocks and be like, what a great year, I'm selling everything. But the true money is made by holding for as long as you can. There's a famous quote in the investing world from Warren Buffett, one of the greatest investors of all time. And he says, our favorite holding period is forever. So he likes to hold his stocks forever. His biggest regrets, selling stocks. So if she invests, for example, $40,000 lump sum 20 years later, which is about the same amount that she's going to be investing into the stock market over a 30-year period or a 20-year period, she will not have the same result. So investing isn't about putting as $100,000 into the market on year 10. It's about gradually putting in $100 here, $200 there, if you can, $1,000 a month, $2,000 a month, and that is possible. I make it work, but again, I use every single privilege that I have to make it happen. About 60%, 70% of my income goes towards the market. I want to get as much in there as possible. So when I do live a work optional life, I'll be able to homeschool kids and teach them this, because I know the schools won't. Should I pay off my debt first? Negative reinforcement versus positive reinforcement, right? So debt payoff. We have student loans, we have a credit card debt. Well, it's a math problem, but also a behavior problem. So math problem, let's break that down real quick. If you're, a few slides ago, we talked about how it makes sense that even if you're in big debt, it's not really the dollar amount that matters. What matters is the percentage of interest that you're paying. So if you have $1 million of debt, but it's 1% interest, it still makes sense to be investing in stocks, because the market gives about 7 to 10% on average over a long period of time, annualized average. 401ks come with a match on top of stock market growth. So it does make sense to pay off your debt if you're looking at around 4% interest or lower, unless it's inside of a 401k that comes with a match. Right, we're trying to get rid of our debt. So this is kind of negative reinforcement, but we can also frame it as positive reinforcement, because our net worth is increasing with that. But I think for a lot of people, it's like, we just want to get rid of this. There was a cool Greg Hanley YouTube video where someone asked him, so your example, is it positive reinforcement or negative reinforcement? And he was like, who cares? It gets the job done. We can learn out about it later, but let's get the results first, and then we'll try to figure out if it's negative or positive reinforcement. Chapter 4, face fear and anxiety. Just like our clients do on the daily, we kind of create these situations for them, like maybe tolerating or accepting. I don't like the word tolerating. It's more about accepting things, right? Accepting that the toilet is going to make a noise, whether they push the button or not. And we build them up to that. Maybe we'll play a game where it's like Jack in the Box and it pops up. Maybe we'll pair a sound. Maybe we'll have a tablet playing toilet flushing sounds and give them control over the volume with that. Or we'll give them headphones for the bathroom trip and stuff like that. So we need to create these strategies for ourselves, right? If we have 5-year-olds doing this, well, I don't know how old you are, but if you're like 50 years old, then you better do this for yourself too, because you know people 10 times less your age, you're having them do things that they're not used to and kind of afraid of. So you should do things you're kind of afraid of. Um, the stock market is going to crash. That's a fact. Just accept it. The toilet is going to flush. Accept it. But when? No one knows. There's Robert Kiyosaki, author of Rich Dad, Poor Dad, love him or hate him. His name is going to pop up. And here he is again predicting a great stock market crash coming in October. Well, we're in November now, and October was one of the greatest stock market months that we have seen in a long time. And in November, we actually had one of the biggest one-day jumps that I've seen with my eyeballs. I've seen jumps like this in 2020 with COVID. But the longer you're invested, the more you'll see those jumps. So this is just yada yada, people fear mongering. And sure, you could be afraid, but you still do it, right? It's still the most rational decision to make because money goes down every year in value. Stocks tend to go up a majority of the time. So if you're a rational thinker or try to be, and not everyone buys that humans are rational, because if we were, we'd all be buying stocks and stuff like that. But the point is, he's saying he's not selling his gold, his silver, his Bitcoin. So there are so many philosophies. And Robert Kiyosaki is a great investor. He's definitely doing very well for himself. But I don't like that philosophy. I like to buy and hold. I would never consider selling anything that is an index fund which tracks the top companies. And this is what that index fund is tracking. This is from 1880 all the way to 2020. So as you can see, this is pretty wild. This is the Great Depression right over here. That's gnarly. This looks like crypto right now. And when it comes to crypto, your boy's buying a little bit, but only 4% of my income goes to crypto. The rest of it, purely stocks. And sometimes Pokemon cards, but that's a different TED Talk. Pokemon cards go up a lot. .com bubble. This is the early 2000s when companies like Amazon, right? A lot of people say, man, if I could only buy Amazon back when it was $100 the first time, right? Because it went up as high as I think like $3,000. So people turned 100 to 3,000. Well, no one did, because you would have to accept the fact that Amazon goes from 100 to $10 and then to 2,000, 3,000. Yeah, that's a hard thing to accept. Most people can't ride out a crash like that or average in. You need to create rules for averaging in. Long-term investing, I mentioned this and I'm mentioning it again, 99.9% chance of having more money than you started with in a 20-year period. Okay, chapter 5. What the heck do I do now that I have all this information and knowledge? Knowledge is useless without action, right? Not misery. I think wisdom without action is just depression, right? So you can know everything in the world, but if you don't take action, you're just going to be depressed, sitting on all this weight, which is the weight of your knowledge. So self-management and behavioral change. This is a very, very simple TA. The first thing you can do is create an account for investing. Right now, I'm promoting the Webull one because Webull actually pays me and it pays you for creating an account. But there are other platforms. I don't want you to get stuck because this is the first one you heard of, but you'll get about $40 for making an account. This is the one time you will be reinforced for your investing behavior. Now, all investing accounts that deal with stocks are insured if they get hacked or they go down. There's different types of insurances that they have. I think it's important to have multiple accounts because there are limits to how high these insurances go, which is about $500,000. Now, this isn't an insurance on I am putting $100,000 into Apple and Apple goes to zero. That's not going to insure you from making from those decisions. It's going to insure you if they get hacked or they go under as a company, to make sure your stocks are either transferred or you get paid out for what your stocks were. I've never seen that happen. It probably will happen one day to something, because anything that can happen will happen, but it's very, very unlikely. I don't think that's ever happened that I know of. And I study the game. Now with crypto accounts, so that already happened 4 times this year, where, sorry guys, this platform is under. And I had 2 accounts with crypto where that happened. And crypto's a whole other ball game. But behaviorally, the same rules. So once you make your Webull account, and I will send you guys a link, right? There's different promotions. I'll also send the Fidelity link because they're giving away $150 right now. But the way that I like to break things down is I will have Webull be, for example, my Roth IRA, and then Fidelity be my brokerage account. So I'll have different account types for different platforms. And that way I'm diversifying and keeping myself even safer and kind of more organized. Now, step 2 is setting automatic contributions. You want your money going in without you touching it. And you want to buy the positions that you want to be buying. I personally buy an index fund every single month, no matter what, which is the top 500 companies, the ticker symbol that I shared in an earlier slide. Let's get back to it real quick, and then we'll wrap up and do a Q&A. Dun, 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 is VOO. Now, I knew this at the top of my head, but I want you to show that I put my money where my mouth is. And this is, at the time of the screenshot, about 17% of my portfolio. Now it's probably closer to like 20% of my portfolio, especially as the market rebounded. This is probably, back then it was like 42K. Now it's probably like 60K. While the total value of my portfolio is pretty much in the same place, because the market still did crash. Okay. And no one regrets buying stocks during a market crash, as long as they don't try to bet on a specific time, right? I like to do things 2 ways. I have 2 strategies. One strategy is every single month on the 24th. 24th, my grandma's birthday, July 24th. So every month on the 24th, I invest. If it's a holiday, like it was on Thanksgiving right now, on the 24th, I would invest either the day before or the day after. Same thing if it lands on a weekend, the day before or the day after. But don't be like me and set up your automatic contributions so it'll happen automatically. Just log in the month after to make sure it's actually buying stocks and not just transferring cash to the account and sitting there. You don't want to do that. Record the behavior, right? Maybe go on Instagram and type in, hey, I've seen some BCBAs doing this. Someone wrote, I really like this one. They wrote, this Black Friday, I'm just thinking about investments. And I was just like, hey, this Black Friday, I bought a bunch of stocks. So record the behavior and tell a friend, because that we have to create our own reinforcement here. Telling a friend creates a community around stocks, and there are communities around stocks. If you type in like Alibaba stock, you will see all these people sitting in their rooms talking about this company and why they're investing in it. For example, Berkshire Hathaway has huge community behind it. That's the Warren Buffett owned company with Charlie Munger. So here are some free resources that you guys can use to kind of improve your financial health while you're driving around. Maybe you're going client to client. The Simple Path to Wealth, great book. You can actually find it for free on YouTube and play the audio recording. And that's what I did for the Simple Path to Wealth. If you want a classic, a harder but denser read that talks about the stock market all the way from the 30s by Benjamin Graham, the Intelligent Investor. This is the mentor of Warren Buffett. Goosebumps, right? Pretty cool. Another one is The Common Sense Guide to Mutual Funds. I think that's what it's called, by Jack Bogle. He is the founder of the Vanguard investing platform. He did pass away in 2019, but even Warren Buffett says if anyone gets a statue for being an investor, it's Jack. One of the greatest of our generation. He made investing accessible for the middle class. Money Tree Investing podcast, I listen to every episode while I drove. Choose Fi, I would say, is a more preppy version of the Money Tree Investing podcast, a little bit more exciting. The Behavioral Ladies, your boy Georgie, aka Funancialism, I did a financially savvy episode with them. So if you guys are into ABA and finance, there's a cool mix on their podcast. And then Financial Flexibility is actually an ABA chat on investing and frugality and all of that inside of Facebook. So that's pretty cool. I think some of you might already be a part of that. So I enjoy scrolling through there. I'm pretty quiet usually, but yeah. And then I got my own product. So there's the gift shop portion, Investing Journeys. That's something that I am building for the new year, and I will have a pre-sale probably tomorrow, Cyber Monday. Take advantage of all that. But this will be about money management for kids, credit card practices, how to get paid about a few $1,000s a year by opening up new credit cards. A lot of people have the wrong idea that ruins your credit score. It actually decreases it temporarily, but increases it over the long run, as long as you know how to manage that. And hey, it's $2,000 a year. Heck yeah, I'm gonna learn to manage that for just clicking a credit card and opening it. Yes. A lot of people have aversion to credit cards, especially with the Dave Ramsey school of thought. But I know people who make about 40 grand a year and they travel to 28 countries in a single year, right? Without taking on debt, with knowing how to use credit cards. Of course, I want to include investing accounts, how to organize through them, 401ks, Roth IRAs, dividends, ETFs, mutual funds, stock market positions. My favorite section, right? This is only like 4 to 10% of my portfolio, but I can't stop talking about it. And it's cryptocurrencies and NFTs and other alternatives, such as, I don't do this one because I actually hate alcohol, but you can buy sealed bottles of wine, like from the 80s, 60s, 50s, 30s, and invest in that. But instead of holding the actual physical item, you buy a share of it. So that's pretty cool. You could buy like stocks of rare items like that, including Pokemon cards, which we know we had our first ever 7-figure sale of a Pokemon card. So that stuff does go up over time as well. It's funny, right? I told you guys I love talking about that stuff, and I just spent more time talking about that than the stuff that really makes a difference, which is the 401ks, the Roth IRAs, the dividends, the ETFs, mutual funds, and stock positions. There's tax rules, right? Writing off losses. I actually sold some stocks just to buy back similar positions so I could take the loss during the stock market crash and use the profit from that loss to decrease my taxes. So that's awesome strategies. Whether stocks are going up or down, there is advantages to it. Market crashes, how to take advantage of market crashes, the history behind market crashes, and of course, for all my students, I promote different freebies, such as I am talking to you about just 2 of them, Webull and Fidelity, which everyone here, hopefully within the next 24 hours, will take advantage of, because I will send this recording and I will send those links for you guys to take advantage. The Webull one does pay me. The Fidelity one does not pay me. So if you don't want to support your boy for giving all this value, just make the Fidelity one and get that $150 for yourselves. But make the Webull one. It is helpful and it is a cool account. The reason why I do like Webull more than other platforms is because it comes with a paper trading feature, which is hypothetical purchases. So they'll give you like $1 million and you can do whatever you want with it in real time with stocks. And you could buy it, you could sell it, you could realize firsthand that day trading does not work. And that's a lot of fun. So Webull comes with that option for you guys. And Webull has access to cryptocurrency as well, although Fidelity is working on it or right on the cusp of releasing cryptocurrency as well. So if you're interested in that, Webull also comes with a crypto wallet. So if you want to be ahead of the game with that, you can take advantage there. But again, please focus on dividends, ETFs, Roth IRAs. And again, you have to buy stocks inside the Roth IRAs. Please don't just have cash sitting in there. Wait, there's more. Yes, we will have live quarterly meetings for members of my future program, Investing Journeys, pre-sale coming soon. And with that, here's some testimonials. I'm going to be humble for a second and just move on real quick here, but this warms my heart. So I know what I create is awesome. I hope to make some CUs in the future. And yeah, I hope you guys had fun. Let's open up the Q&A right now. And we made fantastic time. I am so happy. So here we go. Oh, and a special gift I added this last minute. I'll be selecting 3 people to give a one-on-one coaching session with. I've done coaching sessions in the past one-on-one. So if you're interested in that, folks who do purchase the future program, Investing Journeys, will get a chance at a lottery of that, or you could just do that on your own if you want to. With that, congratulations. You guys could take a screenshot of this right here and post it on your Instagrams. Don't forget to tag at Funancialism. There are a lot of fake accounts, guys. If you follow your boy, you will probably get messaged by a fake account, usually very desperate people in other parts of the world. So go easy on them, but please report them if you ever get a request from a fake Funancialism account. Sometimes they even message your boy's mom, and my mom's like, yo, how do you not report these guys? I'm like, it doesn't matter. It doesn't matter. They don't get taken down. Anyways, with that being said, you guys got any questions? I'm gonna stop sharing right now, and you guys can go ahead and ask whatever questions you have. Just go on the mic and go for it. And if you're shy, you can type it in. And I love awkward moments of silence as well. We'll give it just a minute.
I have a question regarding hi. I
Okay.
have a question regarding you mentioned something about usefulness of paying off your credit card while you have 401k that giving you 20%. But what if you don't have 401k and probably not going to get it anytime soon? So in this case, any interesting points that you may give?
Yeah. By the way, I really liked your post in the ABA Marketplace. I saw it this morning, and that was a beautiful, just beautiful honesty. And that's why I do this. It was definitely inspirational to read your struggle and how publicly you shared it. So I appreciate that. If you don't have 401k contributions from your employer, so you're not getting that match, right? You can still invest in other accounts. But if you have credit card debt, the stock market can beat that credit card debt interest, but it probably won't. And that's why I will always prioritizing paying down the credit card debt and making it zero. Because if your credit card interest is like 18%, 16%, the stock market, you want to expect about a 10% increase in the stock market on an annualized average. So without the 401k match, your goal should be to pay off the credit card debt as fast as possible, unless you're building a behavioral system where you will be investing maybe $5 a month or something like that, just to get it started and set up before you increase your contributions.
Okay, so in this case, I am a small company owner, and my company is not doing quite well, so I can't offer the 401k because we consider a small business, so we only can have simple IRA. but it doesn't matter in any case at this point right now. It's not even a point. But didn't you mention that there is a tax break for example, somebody who lost on um, on uh,
Stock?
um, on crypto, because I
Yeah,
had about $200 in Litecoins,
yeah,
$2,000 in Litecoins, and right now it's about worth about nothing. And I just was wondering if there
yeah.
is
I'm
any
right there
kind.
with you with the Litecoin. I rode that out since 2017. Even when it went to 400, I still held on because of my behavioral habits. Most of the time, you'll be rewarded. But with individual positions, it is a lot more dangerous, right? Buying an index, something that tracks everything, and there are even companies you could buy that invest in crypto. So you could get like side exposure that way. But the cool thing about crypto is the tax laws around it. When it comes to your own research and all that. But when it comes to crypto, there's a difference between how stocks work and crypto works when it comes to the tax losses. So what, say you have Disney stock and it goes down 50%. You can't just sell it and buy it back and claim that loss. You have to wait 30 days before you could buy your Disney positions back and claim the loss. But with crypto, you can literally sell it and buy it back. Say you have 2 grand in Litecoin and went down to 200, you can sell it all. Now you have a 1.8K loss, and 3 seconds later, you can currently buy back that crypto and you still claim the loss because it's not considered a security. It's not considered like a stock. It's considered more like real estate. But that's, you got to look into that a little deeper on your own. But that's a cool strategy. You could literally sell it and buy it back 1 second later. This will not work for stocks unless it's an exchange traded fund or a mutual fund where you can sell one and then buy a similar one 1 second later. So this is an amazing strategy, and it could go away basically even by the end of December. If lawmakers decide, hey, we're getting rid of it, then you might make that move today. And then they'll say, hey, you actually can't write off that loss for 2022. That's just the mystery we're in. We only have 1 month left. So usually at the end of December, people are like, okay, there's no new rules. I'm going to sell my crypto now and buy it back 1 second later. There we go. 2023. We'll see what happens.
Okay.
Yeah. So I hope that
Good,
helps.
good strategy. Yes. Thank you.
Yeah. And one thing I want to add real quick, in reference to your post, if anyone's in the ABA marketplace, definitely read that. But Warren Buffett was 54 years old when he had less than 1% of his current wealth. So that hopefully puts some perspective that 99% of his purchasing power, what he has today to be one of the top 5 richest people, came after the age of 54. So there's definitely a lot of moves. I think the culture is kind of ageist, where they're like, "What? You're 22? It's over for you. You didn't invest when you were 12, like Warren Buffett did." So yeah, there's definitely a lot there. My mom started at the age of 49, like really being conscious of it, and she has not regretted it. Now, she had a lot of fear with it. Definitely, she was like, "I'm selling all my stocks," but she never did. But that's just something to be mindful about. That a lot of victories happen after 55 for people like Warren Buffett, who's like, "Life is long. I'm gonna keep on going."
Thank you. I
Yeah,
appreciate it. Thanks so much.
yeah. Any other questions?
Yeah, hi.
Hey, Francis,
Hi,
what's up?
Dorothy. Hey, thanks so much for doing this. I'm interested in the coaching because I like how you just focused on us being older and feeling like we don't have the time on our side for this 20-year span that you talk about. Although maybe we do, but I don't get how we realize the benefits then. If you're just saying, put your money, watch it grow, then how am I benefiting and using it? I don't
Yeah.
get it. And I don't know how to decide what to even invest in.
Yeah. So a lot of times, even younger people, they're like, hey, when am I going to actually get the fruits of my labor? Who cares if I have $1 million portfolio if I can't use it? And this, it does go to what is important to you. So what's important for me is to build generational wealth and leave as much as possible for the next generation, even if it's in the form of a charity fund or something like that, where I decide what that money will do. So that's something that's important for me. I want kind of my spirit to linger on through the money and impact the world after I'm on my next adventure. But my other goal is to live off those stocks. So I want to sell a very tiny fraction of it to cover some sort of need. For example, if I get to a point where I have a $1.25 million portfolio, I will be able to, in quotes, safely, end the quotes, withdraw about $40,000 to $50,000 per year. And the market, since it goes up about 7 to 10% annualized average, it should regenerate more than I took out of it. But if I don't want to leave anything for the next generation, I'm not even going to worry about that math. I'm going to be withdrawing about 8 to 10% every single year and just spending it as I go. But my strategy is to only use a small fraction of it to cover basic needs like food and shelter.
Yeah, that's super great. I'm just not, maybe my brain doesn't work with the math very easily. And how do you know when to sell, or what point
Yeah,
you would
so
do that?
you would do it, not financial advice. It would be not determined or based on the prices, and it'll be just based more on a time schedule. So every 30 days or so, you will sell what you need for the next 30 days. There's a lot of different strategies, and there's this guy, I forgot his name, but he has a lot of content for 50 plus investors. I think his name is, there's definitely a burger in his name. If you go on YouTube and type in burger, you will find him. Maybe I could find it real quick right now. But
Burger.
he has a lot of cool videos for investors who are 50 plus investing. Let's see, Burger Investing didn't, oh, there it is. Rob Burger, Berger. Let me see if I could share that real quick with folks interested. And I watch this for even younger investors as well. I actually go through a lot of his videos. He has a cool video where he talks about if you get to the point where you're in your like 70s or even 80s, what's the safest way to withdraw from your stocks? And it is still that 6-month kind of fund. So you would have 6 months of expenses if possible in cash, and then you would spend 1 month, another month, another month, and when you get to 3 months left, you would sell 3 months worth of stocks and fill it up, kind of not really looking at the prices. And that's kind of what a lot of more advanced investors do. They don't care as much about the prices of the stocks as they do about what can they do with it. And for me, every 24th, right? Obviously, sometimes the market's going to be at an all-time high. I'm not going to wait for the market to get higher or lower. I'm just going to buy on the 24th. And that's been working for basically the last forever, since index funds started in, I think, 1967 or something like that, from Jack Bogle. And he revolutionized the game with that. Let me, did I answer that question?
No, I love that. Yeah, but that's, can you advise what kind of person, if we are looking for help more directly, what is it called? There's so many names now that I'm seeing: a fiduciary, an advisor, a planner.
Yeah,
I don't even know. Who is it?
that is very, very tough, because it's like dependent on who you are. If you go to someone in the bank, they're probably going to try to scam you in some way. And I had friends who are in their 20s and they showed me what they're invested in. And I'm like, who told you this? It's like the financial advisor at the bank. And I'm like, you just paid, basically they invested 100K and they paid 5,000 just to do that. And I'm like, that's not how investing works these days.
Yeah.
So the best thing you can do, honestly, is watch, I would say, those burger videos and go from there. Ask him questions in his lives, but make an action. Take $1. I challenge you to take $1 and just invest that dollar into whatever you want, just so you could like break the ice. Behavior momentum. Do something easy that's low stakes. You'll see success, You'll watch that dollar turn to 50 cents, or you'll watch it turn to $2, and you're gonna say, man, I wish I invested more. But that's what I would say is a
Yeah,
great
because I
start
want
for you.
my children who are in their 20s, and I tell them about you, and they have zero financial education. This is not in schools. This is not being taught.
Yeah.
It's a crime in our society. I'm so thankful that you took it upon yourself to be showing up here, and I've been following you for a little while now, that I'm really impressed, and I thank you so much. But I still, like people like me who are so fearful and unsure of themselves, I went on a call with an investment fiduciary, and they say that they're bound to really be like a trustworthy person.
Yeah, they
But
are.
then some of them don't, they won't, if you're not ready to fork over 1 to 500,000 immediately, they don't even talk to you
Yeah,
one-on-one.
yeah, because it's not worth their time if they're getting
I
some sort
get
of
that.
like
Yeah.
percentage. So the best thing to do would be to watch those, I would say, Rob Burger videos. That seems more specific to your situation. I think that says, because there's so many niches here. Like, is it
Yeah.
based on age? Is it based on dividends? Is it based on real estate? Because some people buy real estate through stocks, like REITs. So I would start with Rob Burger, watch 40 hours of his videos, and then come back. Okay,
Thank you so much, Georgie. Let's get the
You-
next generation in there.
you got it. Let's see. Texas Investing. That's someone I've been talking to for a long time. Says they already did all of the freebies.
Yeah.
So that's awesome. That's awesome, my guy. You're taking advantage. If you think about it, those freebies, right? We're talking about 18% profit that credit card companies make off of us. But if we put $50 into say a Fidelity account, we're getting 300% returns on that $50. That's why I said, like, the measurement system you use is a framework for the way you understand money. So if you're looking at it in terms of dollar amounts, you're like, 150 is not going to change my life. Some people it will. But if you're thinking of it in terms of percentage amounts and what that means compared to the stock market, if the market gives about 10% a year and you're getting 300%, you're basically having your 50 bucks time travel 30 years or whatever. So I will always take that. And I know Texas Investing, you've been taking advantage of all those. There are literally thousands of dollars that companies pay out. It's advertising for them, right? You will tell a friend to tell a friend if you're getting $150 for simply making an account. So that's why you need to take advantage. You don't even have to invest that money. You just have to make an account. That's it. Webull, $1. You put $1 in and you're getting up to 12 free stocks. I had a friend at work who got a $3,000 stock of Amazon. That's very, very lucky. We were going nuts in the car when my girlfriend got a $60 Starbucks stock for just spending 3 minutes of her time. Now, I don't know if anyone here makes $60 in 3 minutes, but you know. And the biggest concern people have is, well, now I have all these accounts to manage. I'm like, yeah, but you're way, way, way richer. That's important. I don't think the reason why people don't make these accounts is because of it's more money to manage. I do think that it's deeper than that, and I did my own ABA experiments on it. It's because it's aversive, and it's aversive because it's a new platform. Every single time we make an account or sign up for a credit card, it's a new platform, and each one of them look different. And I think we're trying to avoid that. Okay. Any other questions here? You guys could feel free to fight for the microphone.
Well, I was just writing in, that guy I talked to on a free Zoom investor planner guy said to look, and I wanted to ask if you know anything about Wealthfront.
Yeah,
where you can
Wealthfront
do
is
like
great.
a robo.
Yeah,
Okay,
you could
he
do
said that he uses that.
right. There's robo advisors, which they usually take a quarter of a percentage of a fee. So they're gonna take 25 cents basically for every $100 you put in, which is somewhat pricey. I always like my investments to have less than a 0.2% like field, but if someone's having trouble getting into investing, they can have an algorithm, a robot basically do the investing for them, and it costs a quarter for every $100 that you invest. And that is on Wealthfront. There's also Betterment. There's a few different ones that do it, and for a lot of people, it is worth it, especially if it is a non-retirement account, like a brokerage account, because that robot is going to do tax loss harvesting. I might be losing some of you. Tax loss harvesting, so it'll sell the stocks that are in the red automatically for you, and then buy back similar stocks or similar funds automatically for you. Now, depending how much money you have, that could be worth it with that 0.25% fee, or it might not be worth it. You kind of have to do the math and think about it. I like to do it all by hand, but it's fun for me. Some people hate this stuff. So it's really up to you to decide if you want to try it out. And you could always split your money, like 20% is going to go to a robo advisor. So that's something you can do. And then 20% is going to go to this other robo advisor, and 80% is going to go to you. So that's something that you can think about doing.
So that's different than you said an automatic investment
It'll happen automatically
button.
too. But
they're charging you.
They are charging you. Yep, they're charging you to do
Another
that.
place is not, you're not getting charged. It's just something you sign up to do. Is
Yeah.
that right?
So robo advisor is different from automatic investing, but robo advisors are inclusive of automatic investing, and it does come with that fee. I know some people are just joining in right now. It's probably a time difference. We're actually on the Q&A section, but this has been recorded. So if you're watching the recording, hello, how you doing? Don't forget to drop a like on this video. It's probably not public, but the like won't matter. That's something that you can do. That's a great question about robo advisors, and that's definitely something I'll be including in the journey. Erica's saying this has been this session, ABA talk, this session was very informative. I'm ready for some systematic desensitization. So I'm very excited that you're going to take power into your hands. A lot of us don't recognize what we got over here. Texas investing, my boy. What's on your mind? I could feel a thought coming.
No, I just really want to personally thank you, not for what you do for me, but what you just do for everyone else, like in the community, whether it's like Instagram or whatever social media platform, because there's not a lot of people out there who actually do what you do. And so, I mean, it's just like a personal gesture of mine that I want to thank you. If I had to say another thing, like I don't really, like, before I met you, I didn't know too much about investing. I knew about it, but I didn't know as much as I do now. I was always more like, involved in like credit, sales and stuff like that. I mean, I'm number one in sales in like my whole entire city. But because of you, now I can like, understand investing more. And we've, like you said, we've been talking for like months and months and months. And not only coworkers, but I even tell clients of mine about you and how you can just change their life and everything. And not just you too, I say like all these other people, right? But you more importantly, because you like provide the better deal than most of these other people do. Because, you have sessions like this where it's like, it's like a free session that you're doing off of Zoom. But then you have the other times where it's like $64, but even that $64, you offer promo codes to people just to even help better their lives for the good. And so I just really appreciate what you do for people. Again, this isn't just for me, it's for everyone. I'm a community person.
I didn't pay him. I did not pay him to say that. I appreciate all that love. It goes a long way. Yeah, that's one of my strategies. Like whenever I create a product, I make sure that I find promo codes where it turns out to be free for you, or you make money on top of it. So people are incentivized to do those aversive tasks that they otherwise would avoid. But now it's like, wait, so I get all this knowledge. It's basically like a college course, but I get it for free if I just spend 20 minutes making a Fidelity account, a Webull account, a SoFi account, or signing up for a Discover card or whatever. So I like that. It definitely works on certain people, definitely on the number one salesman in their city. It works on people with that mentality, but I want everyone to be able to do this. So it's really awesome that you're spreading that word to other folks. Now, guys, I do have to hop off in about 60 seconds or so. So if there's a final thought or question, let me know. I am on Instagram under Funancialism. Spell it right because there's a lot of scammers out there. Don't fall for them. I had personal friends actually send them money, and I'm like, oh, You just have to click their account and you will see there's zero engagement. All the followers are fake. So please, media literacy is a big key, but that's how you spell it. If you guys don't follow me, if you're here from Facebook, it is Funancialism. And for BCBAs, I cannot wait to do CEUs in the future. So hopefully I'll be teaming up with all of you in the future. But with that being said, I appreciate everyone here. Thank you so much for the love. And I will see you later. Oh, thank you, Marin.
Take
I
care, man.
appreciate that. Take care. All right. Bye.